Hey guys, welcome back. In today's video, we are talking about the great AMC news, the possible AMC acquisitions, the $65 short-term price target, and many more in this video. First, we're taking a look at this from Adam Aaron. AMC said today that we fully completed a $150 million equity raise, announced 4 months ago. It is particularly encouraging that the AMC share price has risen by more than 50% during this time, showing presumably that investors' confidence in a resurgent box office outweighs fears about dilution. This is such good news for AMC on all counts. This greatly bolsters our cash reserves. I've said it many times, cash is king. So this is the final ending towards the equity raise. Now, what we have to realize is that we greatly reduced the amount of shares that were diluted because the price of AMC has obviously risen. And that's ultimately what one of the main things we have always been talking about in terms of AMC raising money and why it's so powerful for AMC to go up even slightly in terms of value. And it's why the shorts have been continuously trying to stop AMC from reaching $5, from reaching $10. It's because they've realized how much AMC is able to raise and the ability that we have. But regardless, we still done it. We are still able to raise the money at a lower share count than expected. So this is obviously very good. And what we can see here is firstly, Adam Aaron edited his original post to read, "This greatly bolsters our cash reserves." Now, this is very important because it talks about the things that Adam Aaron has in mind for AMC. Ultimately, what we want for AMC is big things in terms of paying off debt, in terms of share buybacks, in terms of dividends, in terms of investment into infrastructures. Now, the first three mentioned are three things that would have immediate short-term effect on AMC, that will bring AMC to a very high level. And all of this revolves around the fact with how much cash does AMC have. And so when we take a look at the fact that Adam Aaron is still trying to increase the share count in terms of increasing the cash reserves, along with that, we are looking at a very, very healthy AMC. And we have so much potential going into the future right now with how well Adam Aaron can do with this cash. We've already seen in the past how it was used correctly. So we can definitely expect in the future how this is going to be used at an even effective rate. And what we have to understand is that with this, we provide additional flexibility to support our long-term strategic objective. So yes, we talked about some of the things that they can do to have immediate short-term effects, but never forget about what they can do for the long term as well. Now, when we already take a look at what AMC is able to do, firstly, we talked about paying off the debt, and that's going to have a short-term and long-term effect. The short-term effect is when AMC is paying off debt, they're in a better fundamental position. That's going to encourage more investors. The long-term effect is obviously then the decrease in interest payments, which is then going to go into the profit margins going up higher. And so that will be the long-term effect. But what we also have to realize is just what AMC is trying to do as well in terms of some of the investments they've made. We talked about the investments into infrastructures. We talked about the potential acquisitions they've mentioned in the past, and especially recently with what we talked about with some potential acquisitions ideas floating around. These are all very, very good things. Also, something that they can do as well, which is when we do see the AMC price go up higher, they can then do another share offering, which because of the price increase in AMC, it allows them to decrease even less shares, but raise even more money. Now, this is obviously just an idea throwing out there, but it is something that AMC will have the ability to do, which can put them in even better cash positions, because ultimately in the long run, if AMC is able to produce a lot of cash, we're then able to see them fully pay off them. We're then able to see dividends. We're then able to see share buybacks, and ultimately in the long run, it would benefit investors more, or at least in my opinion. We also have to realize AMC was trading at all-time highs during COVID. Theaters were closed. Now we are $2 with better fundamentals and a recovering box office and less debt. So ultimately, we have to realize where AMC is at right now and just how powerful we are. This is something that we have been going on and on about, but we really have to realize this. And so far, multiple big money has seen this, and this is why it's reflecting in the recent price. AMC is up another 9%. So bear in mind, in the last 3 days, we went from 7%, 7%, 9%, nearing 10% in the last 3 days. And this is not just because of the recent box office, but this is also because of the future projections of just naturally how undervalued AMC is and what a great investment is. And so we are in a better position than we were when AMC reached the all-time high. So just think about the potential that it has, and many people are seeing that, and is why they're trying to accumulate as much as possible. And so when you combine AMC's complete equity raise / improved liquidity with growing box office, growing revenues, positive net income, and positive free cash flow anticipated the rest of the year, growing revenues per patron, no more cash burn rest of the year, the story begins to improve for AMC in the risk analysis department. So this is ultimately what the apes have been saying for a very long time, and we're seeing it right now. And it isn't just the retail, it isn't just the apes who see this, but big institutions have also seen this. Now, we've already seen them make the first move. When we talk about some of the big acquisitions or the big accumulations made by UBS, made by Discovery, that's all because they realized what AMC was going to do. Now that AMC has shown this, now that AMC has fully showed the whole world what it's capable of, you can definitely expect even more capital raising flowing in for AMC. And it's why we're seeing the price of AMC rising, is because exactly of this. And we are seeing a great movement for AMC right now. We're seeing a very, very positive future. And it ultimately just goes on to talk about how AMC has finally moved from surviving to thriving. And we're all thrilled to find out what ace you've kept up your sleeve. And this pretty much sums up AMC right now. Now, I believe that AMC has gone past the surviving phase for a very long time, but we definitely are in a phase right now where AMC is working at its max capacity in terms of how much it's thriving, in terms of the future projections and how well it can grow. Right now, there's a lot of things that AMC can do, which puts them in an even higher level. Bear in mind, we are already the biggest market share within the industry, but there are always things that we can do to then get us even more market share, to make us an even bigger company. And that's exactly what AMC is trying to do right now. And definitely with some of the future partnerships that we have as well, with what AMC has talked about, what Adam Aaron has talked about, along with the cash that we have right now, you can definitely expect some big things happening. I'm not just talking about some of the basic things that we've mentioned, some of the big things that we talked about in terms of acquisitions, or at least that's still very special, but that's something we talked about. But we're talking about some of the moves that has not yet been mentioned, that has not even been thought of, but Adam Aaron may possibly do, that will really pivot AMC into a different level aside from all its competitors. And another important thing is that now that we have completed the equity offering, we could, if we just get an update on what Pentwater and Discovery are in terms of what they're doing with the shares, it would also be a big thing. Now, this isn't something negative. This isn't something that is going to be bad, unless, of course, they've both come out to say that, you know, they are lending these shares out to allow these guys to fully rehypothecate and create synthetic shorts. Is very, very unlikely. But what we can see from them is potential things that they want to talk about in terms of why they got in, and especially how much that they've bought. But also we saw the potential short squeeze potential as well with what happened with ticker symbol CAR and how that can be replicated towards AMC as well. Bear in mind that a short squeeze on AMC will yield a much greater return than what CAR did. And so with that in mind, it's obviously in their best interest to try and push AMC towards that short squeeze. And now, as we talked about, AMC isn't going bankrupt. AMC is at $2. Vanguard owns over 50 million shares. They aren't in the business of losing money. The averages is significantly higher. And this is what we talked about with how AMC is still extremely undervalued. You have to understand is that institutions who have bought in AMC at a higher price not only have not sold their shares, but continue to buy more AMC shares. And that really is just showing how undervalued AMC is, because they're not in this business of losing money. If they think that AMC is going to go bankrupt, if they think they're going to lose their investments, they would have sold their AMC shares by now, not do the complete opposite and buy more. And that's why we've always talked about in the media articles, obviously trying to push a different agenda to what actually benefits the retail. And in the past, what we've seen was how when Citi targeted AMC at $2, it hit 72. Now we're seeing Citi target AMC at 1.2. Now, bear in mind, like we talked about, improved fundamentals, recovering box office, and ongoing debt reduction. And when you already look at the chart, we are already at 228. So it really goes on to talk about with what we've said with some of these sell side research and how they're not actually here to benefit the retail, and how typically they are actually wrong and they get it wrong. And when we see in the past before with what AMC has done, you can see how AMC can do the same movement now. And as we see, AMC is making a comeback. Yesterday's setup was convincing, and now we are seeing exactly what the bulls want to see, and we're seeing the price of AMC heading straight up. And this is why we've said that more and more value, more and more volume are going to start piling and increasing for AMC. We see from Peter, it's safe to say 150 is definitely off the table for tomorrow. At this point, we might see 250. Now, when we talk about John Hampton, a very well-known short seller of AMC, very quiet recently, and it's no surprise because he's been talking about increasing his short position on AMC, but we've seen AMC do nothing but going up. So we definitely are seeing him losing money, and it's why he's being very, very quiet right now. But regardless of that, when we take a look at what we could be expecting for AMC, if we are able to close above 250 on Friday, which is tomorrow, that would be a huge movement for AMC because it would truly put not only the 150 calls deep in the money, the $2 calls deep in the money, but also go in the money for the 250, and that would have the effect we talked about in terms of the gamma exposure. And right now, the biggest mistakes that the hedge funds have made is that they thought apes would quit, and we've done the exact opposite of that. And it's why we talked about these deep in the money calls are very, very crucial, because it forces them to obviously counteract that. It forces them to actually get shares for AMC, but there is a lack of shares because the apes have done nothing but buy, and we've caused this massive problem for them. Like we talked about with the $2 calls, you can see how much they're trading for right now. You can see the increase in them, and that's only going to go even higher. And it's why we're seeing even more people trying to pile onto these calls. And that's what we talked about with the gamma ramping. You can see right now for the June 18th in the money already with 172,000, and then going on for the net rest, we are still seeing the price. Bear in mind, max pain is 150. So when we talk about just how well AMC is doing right now, when we talk about the potential that AMC has, this is exactly what we are looking at. I'm definitely very excited to see where we are going to go in terms of where we're closing tomorrow. But so far, AMC is already at a great position. Now, one of the things to note, one of the things you need to look out for is, in the past, when we talk about AMC going up, when we talk about AMC seeing this movement, it's being met with halts plenty of times. And so bear in mind, the short sellers are still stuck in this. So when we do see AMC go up, we are going to be met with suppression and these manipulation tactics throughout the way, wherever it be holds, wherever it be the use of dark pool, the FTDs, or whatever it is, closing buy buttons, all of these, that's something that we may be seeing. And so I definitely want to warn all apes is that this is something that you definitely need to be looking out for. And, you know, we see them moves so clearly is that the majority of apes will already know this. It's still a warning that I want to give out. We know the trick that they run. We know what they have. We know what they're going to try and do, but we hold on because we know exactly why we're holding on. And in terms of the technicals, for those of you who are interested, or just some of the indicators, right now we are seeing plenty of different price targets. But when we take a look at some of the historical data, and we take a look at some of the historical structure, right now the 39 to 64 to 65 short-term price target range is seemingly there. And this is of course based on historical structure. A lot of things have changed right now because there are a lot more synthetic. So actually we could be seeing it being enhanced. We could see AMC go way above the 65, but so far with what we have, a $65 price target is something that we are looking at. And this is something that can be done very, very quickly, because in the past, we've seen how other stocks have around hundreds, if not thousands of percent in a day. And for AMC, it will have the same ability. The difference is that right now, when we see AMC go up 5%, when we see AMC go up 10%, we're met with constant negative news. And that just shows the desperation. That just shows how they're trying to remove the buy pressure. By the end of the day, AMC has the ability to do that. And earlier, what we talked about with dividends, this is just a record of AMC dividend history. And remember, this is something that AMC has the ability to do once they get to that stage. We've seen seen it in the past, and so it's something that we definitely should look out for. It's definitely something that we could be seeing it happen, and so this is something that would have a massive effect on AMC. In terms of reverse repo, 0.46, nothing major. Until it goes to zero, we're going to be seeing still how the shorts will try and borrow as much money. But another big thing is that currently we're seeing how SoftBank attempts to get a $6 billion OpenAI margin loan. And what this really talks about is essentially the current AI bubble, the overvaluation that we talked about, and how easily we could see the whole market crash because of this, and what that means for AMC. As always, this is the Financial Advice, and I'll catch you guys next time.